What you're about to hear is going to sound extreme. It's going to sound like fear-mongering, like conspiracy theory nonsense. But I need you to understand something right from the start. Everything I'm going to show you is already happening. Not predictions, not speculation, documented facts that the mainstream financial media is either ignoring or deliberately downplaying because the implications are too disturbing for most people to process. We are witnessing the death of fiat currency, not in some distant future, not as a theoretical possibility, right now, in real time. And if you're holding your wealth in dollars, euros, yen, or any other paper currency, you need to understand what's coming, and you need to understand it fast. Let me paint you a picture of what's actually happening behind the scenes. While most Americans are worried about their grocery bills and gas prices, there's a silent war being waged in the global financial system. A war that's going to determine whether your retirement savings have any value at all in the coming years. And the weapon of choice in this war isn't missiles or tanks. It's gold. Physical, tangible, real gold. Central banks around the world are buying gold at a pace we haven't seen since the Nixon shock. And I'm not talking about small purchases. I'm talking about massive, coordinated accumulation that tells you everything you need to know about what the people who run the global financial system actually think about the future of fiat currency. The People's Bank of China has been adding to its gold reserves month after month. The Reserve Bank of India is stockpiling. Poland, Hungary, Singapore, Turkey. Even central banks that historically held minimal gold are suddenly scrambling to acquire as much as they can get their hands on. Now, why would they do that? These are the same institutions that spent decades telling us gold was a barbarous relic, that it had no place in a modern financial system, that paper currencies backed by nothing but government promises were perfectly safe and stable. So what changed? What do they know that they're not telling you? Here's what changed. They've run out of road. The fiat currency experiment that began when Nixon closed the gold window back in '71 has reached its mathematical endpoint. You can't print unlimited amounts of currency forever without consequences. You can't run trillion-dollar deficits year after year without destroying the value of your money. And the central bankers know this. They've always known this. They just hoped they could keep the game going long enough that it would be someone else's problem. But now the chickens are coming home to roost. And the smart money, the people with access to information you and I will never see, they're moving into hard assets. They're getting out of paper and into things that have actual intrinsic value, things that can't be printed, things that have maintained their purchasing power for thousands of years. Let me give you some context here. When a central bank buys gold, it's making a statement. It's saying, we don't trust the current system. We don't trust other countries' currencies. We don't even fully trust our own currency. We need something real, something that will hold value when the paper burns. And here's the thing that should terrify you. These purchases are accelerating, not slowing down, accelerating. Despite gold trading near all-time highs, central banks are buying more aggressively than ever. That tells you they're not worried about getting a good price. They're worried about getting any gold at all before it's too late. Think about that for a second. The institutions that control the printing presses, that can create currency out of thin air with a keystroke, are trading that currency for gold as fast as they can. What does that tell you about what they think that currency is actually worth? Now, before we go any further, I want to make sure you have access to the information you need to protect yourself. I've put together a free guide that breaks down the strategies thousands of American retirees are using right now to protect their wealth from what's coming. It's in the description below. No cost, no obligation. Just real information that could make the difference between preserving your life savings and watching them evaporate. Grab that guide and then come right back, because what I'm about to show you next is going to blow your mind. All right, let's talk about what's really driving this. Let's talk about the mechanics of how fiat currencies die, because this isn't the first time this has happened. It's not even the 10th time. Throughout history, every single fiat currency has eventually gone to zero, every single one. The only question is how long it takes and how much wealth gets destroyed in the process. The pattern is always the same. A government starts spending more than it takes in. At first it's manageable. They borrow a little, they print a little. The economy is strong enough to absorb it, but then the borrowing becomes a habit. The printing becomes necessary just to service the debt. And before you know it, you're in a debt spiral where you're borrowing money just to pay the interest on the money you already borrowed. Sound familiar? It should, because that's exactly where the United States is right now. The national debt is exploding, not growing. Exploding. We're adding trillions to the debt every single year. And the interest payments on that debt are now one of the largest line items in the federal budget. Larger than defense spending, larger than most social programs. We're paying hundreds of billions of dollars every year just in interest, not paying down the principal, just interest. And here's the kicker. Those interest payments are only manageable because interest rates have been artificially suppressed for over a decade. The moment rates normalize, the moment they go back to historical averages, the interest payments become unsustainable. The entire federal budget gets consumed by debt service. And at that point, you have exactly two choices. Default on the debt, which would trigger a global financial catastrophe, or print enough money to pay it off, which triggers hyperinflation and destroys the currency. Neither option is good, but one of them is inevitable, and the central banks know it. That's why they're buying gold. They're preparing for the endgame. Now let's talk about what this means for you, for your retirement, for your savings, for everything you've worked your entire life to build. Because here's the brutal truth. When a currency collapses, it doesn't happen slowly. It doesn't give you time to react. It happens fast. Faster than most people can comprehend. Look at what happened in Weimar Germany, in Venezuela, in Zimbabwe, in Argentina. One day, people are going about their normal lives. The next day, their life savings won't buy a loaf of bread. The currency becomes worthless almost overnight. And the people who didn't see it coming, who kept their wealth in paper, they lose everything. But the people who moved into hard assets, who owned gold and silver and real things with intrinsic value, they survived. They preserved their wealth. They came out the other side intact. And that's what's happening right now on a global scale. The wealthy, the connected, the people who understand how the system really works, they're moving out of paper and into hard assets. They're buying gold. They're buying silver. They're buying real estate and commodities and anything that can't be printed into oblivion. Meanwhile, the average person, the person who trusts the system, who believes the government and the Federal Reserve have everything under control, they're sitting on piles of paper that are losing value every single day. They're watching their purchasing power erode in real time, and they don't even realize what's happening. Let me give you a concrete example. Let's say you had $100,000 in savings 10 years ago. In nominal terms, you still have $100,000. The number in your bank account hasn't changed. But what can that $100,000 actually buy? How much has your purchasing power decreased? If you factor in real inflation, not the fake numbers the government publishes, but actual inflation in the things you need to live, food, energy, housing, healthcare, your $100,000 is worth maybe $60,000 or $70,000 in real terms. You've lost 30 to 40% of your wealth and you didn't even know it was happening, because the number in your account stayed the same. That's the insidious thing about currency debasement. It's a hidden tax. It's a way for the government to confiscate your wealth without you even realizing it's happening. And it's accelerating. The rate of currency debasement is increasing exponentially as the debt spiral accelerates and the printing presses run faster and faster. Now here's where it gets really interesting. Here's where you start to see the cracks in the system that tell you we're approaching the breaking point. The global reserve currency system is fracturing. For decades, the US dollar has been the world's reserve currency. Every country needed dollars to buy oil, to conduct international trade, to hold as reserves. This gave the United States an enormous advantage. We could print dollars and the rest of the world had to accept them because they needed them. But that system is breaking down. Countries are starting to trade in their own currencies. They're setting up alternative payment systems that bypass the dollar entirely. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working to create a new reserve currency backed by gold and commodities. They're tired of holding dollars that lose value every year. They're tired of being subject to US sanctions and monetary policy. They want out. And when the dollar loses its reserve currency status, when countries no longer need to hold dollars, what do you think happens to all those trillions of dollars sitting in foreign central banks? They come flooding back to the United States. They get dumped on the market, and the value of the dollar collapses. This is what Ray Dalio has been warning about. This is what the smart money has been positioning for. The end of dollar dominance, the Great Reckoning. And it's not some far-off theoretical event. It's happening right now. The pieces are already in motion. China and Russia are conducting trade in yuan and rubles. Saudi Arabia is accepting payment for oil in currencies other than dollars. The European Union is pushing for euro-denominated energy contracts. Every single one of these developments chips away at dollar dominance. And every single one of them brings us closer to the moment when the dollar is just another currency, not the reserve currency. Just another piece of paper backed by nothing but promises. And when that moment comes, when the world realizes the emperor has no clothes, the rush for the exits is going to be spectacular. Countries will dump their dollar holdings as fast as they can. They'll buy gold, commodities, anything real. And the value of the dollar will plummet. Now, I know what some of you are thinking. You're thinking, this sounds extreme. This sounds like doom and gloom. The dollar has been strong for decades. The United States is still the world's largest economy. How could this possibly happen? And that's exactly what people thought in every other currency collapse throughout history, right up until the moment it happened. The British pound was the world's reserve currency for over a century, until it wasn't. The Roman denarius was the dominant currency of the ancient world, until it wasn't. Every empire thinks its currency is invincible, right up until the moment it collapses. The warning signs are always the same: massive debt, endless money printing, loss of confidence. And we're seeing all of those signs right now. The debt is unsustainable, the printing is out of control, and confidence in the dollar is eroding every single day. But here's the thing. You don't have to be a victim of this. You don't have to watch your wealth evaporate when the currency collapses. You can protect yourself. You can do what the central banks are doing. You can move your wealth into hard assets that will hold their value no matter what happens to paper currencies. And that brings me to something important. If you're sitting on retirement accounts, IRAs, 401ks, and you're worried about what's coming, there are strategies you can use to protect that wealth. I've put together detailed information on how gold IRAs work, how you can move retirement funds into physical precious metals without triggering taxes or penalties. It's designed specifically for people with significant retirement savings who understand that the traditional approach of stocks and bonds might not be enough to weather what's coming. If you've got 100,000 or more in retirement accounts, this information could be critical. It's in the description. Worth checking out if you're serious about protecting your future. Now let's talk about the supply and demand dynamics that are going to drive gold and silver prices in the coming months and years. Because this is where things get really interesting. This is where you start to see why the people who understand the market are positioning so aggressively right now. On the demand side, you've got central banks buying at record levels. You've got wealthy individuals and family offices moving into precious metals. You've got countries like China and India with massive populations and growing middle classes who have a cultural affinity for gold. You've got industrial demand for silver that's increasing every year as the green energy transition requires more and more silver for solar panels and electric vehicles. And on the supply side, you've got mine production that's basically flat. New discoveries are rare. Existing mines are depleting. The easy gold has already been found and extracted. What's left is deeper, harder to get to, more expensive to mine. And that means supply is constrained just as demand is exploding. This is the setup for a massive price move. And we're already seeing it play out. Gold has been making new all-time highs. Silver has been surging. And this is just the beginning, because the real move hasn't even started yet. The real move happens when the general public wakes up to what's happening. When average people start to panic about the value of their currency and rush into precious metals. That's when you see the parabolic moves. That's when gold doesn't go up 10 or 20%. It goes up 200, 300, 500%. That's when silver, which is even more volatile than gold, goes absolutely ballistic. And here's the thing. When that happens, when the public finally wakes up and rushes for the exits, it's going to be too late to get in at reasonable prices. The premiums on physical metal are going to skyrocket. Dealers are going to run out of inventory. You're going to see delivery delays of months, maybe longer. The people who waited, who didn't act when they had the chance, They're going to be stuck paying astronomical prices for whatever scraps they can find. But the people who positioned early, who understood what was coming and acted before the crowd, they're going to preserve their wealth. They're going to come out the other side intact, maybe even better than intact. Now let me address something that I know is on a lot of people's minds. What about the stock market? What about real estate? Aren't those hard assets too? Can't you preserve wealth by owning stocks and property? And the answer is, it's complicated. Yes, stocks represent ownership in real companies with real assets. Yes, real estate is tangible property, but both of those assets are priced in currency. And when the currency collapses, when you have hyperinflation, the nominal value of stocks and real estate might go up, but the real value, the purchasing power, can still decline. Look at what happened in Weimar Germany. Stock prices went to the moon in nominal terms, but in real terms, in terms of what those stocks could actually buy, they lost massive value because the currency was collapsing faster than stock prices were rising. The same thing happened with real estate. Property prices skyrocketed in nominal terms, but if you sold your property and converted it to currency, that currency was worthless. You couldn't buy anything with it. That's why gold and silver are different. They're not priced in currency. They are currency. They're money in the truest sense of the word. They have intrinsic value that exists independent of any government or central bank. They can't be printed. They can't be debased. They are what they are. And throughout history, in every currency collapse, in every hyperinflationary event, gold and silver have preserved wealth. They've maintained their purchasing power. They've been the lifeboat that allowed people to survive the storm. That's why central banks hold gold. That's why wealthy families hold gold. That's why every smart investor throughout history has held at least some portion of their wealth in precious metals, because they understand that paper is just paper, but gold is forever. Now, let's talk about the mechanics of what's happening in the precious metals markets right now, because there's something very strange going on, something that tells you the official narrative about gold and silver is completely disconnected from reality. The paper markets, the futures markets where gold and silver are traded, they show one price, but the physical markets, where actual metal changes hands, they show a completely different picture. There are premiums on physical metal that are way above spot price. There are delivery delays. There are shortages. This tells you that the paper price is being manipulated, that the true price of physical metal is much higher than what you see on the charts. And that disconnect is only going to get worse as more people wake up and try to convert their paper claims into actual metal. Because here's the dirty secret of the precious metals markets. There's way more paper gold and silver than there is actual physical metal. The futures markets, the ETFs, the various financial instruments that claim to represent gold and silver, they're all fractionally reserved. There are multiple claims on every ounce of physical metal. And that works fine as long as everyone is content to hold paper, as long as nobody actually demands delivery. But the moment people start asking for their metal, the moment they want to convert their paper claims into physical ounces, the whole system breaks down. We've already seen this happen on a small scale. We've seen runs on physical metal where dealers couldn't keep up with demand, where premiums spiked, where delivery times stretched out for weeks or months. And that was just a taste, a preview of what's coming when the real panic starts. When the currency crisis hits, when people realize their dollars are losing value by the day, they're going to rush into precious metals, and they're going to demand physical delivery. And the system is not prepared for that. There's not enough physical metal to satisfy all the paper claims. Not even close. That's when you're going to see the real price discovery. That's when the paper markets break down and the physical markets take over. And that's when the price of gold and silver is going to go absolutely parabolic. Think about it. If you're holding a piece of paper that says you own gold, but you can't actually get the gold, what is that paper worth? Nothing. It's worthless. And when people realize that, when they understand that their paper claims are just that, paper, they're going to panic. They're going to bid up the price of physical metal to whatever it takes to actually get their hands on it. This is the squeeze that's coming. This is the event that's going to reset the entire precious metals market. And the people who are holding physical metal when it happens, they're going to be sitting on a fortune. Now I want to talk about the historical parallels here, because we've seen this movie before. We know how it ends. The question is just how long it takes to get there and how much pain people experience along the way. In the 1970s, we had a similar setup. Massive government spending, endless money printing, loss of confidence in the currency, and gold went from $35 an ounce to over $800 an ounce, a more than 20-fold increase in less than a decade. But here's the thing. The fundamentals today are way worse than they were in the 70s. The debt is way higher. The money printing is way more extreme. The loss of confidence is way more widespread, which means the move in gold and silver could be way bigger than what we saw back then. We're not talking about a 20-fold increase. We could be talking about a 50-fold increase, a 100-fold increase. Numbers that sound insane until you realize that's what happens when a currency collapses. The price of hard assets in terms of that currency goes to the moon because the currency is going to zero. And silver, because it's more volatile than gold, because it has industrial uses that create additional demand, because there's less of it available above ground. Silver could see even more extreme moves. We could see silver go from where it is now to levels that would have seemed impossible just a few years ago. But you have to position before the move happens. You have to get in before the crowd wakes up, because once the panic starts, once the rush for physical metal begins, it's going to be too late. Let me give you another historical example. In 2008, during the financial crisis, there was a brief moment when you couldn't buy physical silver at any price. Dealers were completely sold out. The mints couldn't keep up with demand. People were paying massive premiums over spot just to get their hands on any silver at all. And that was just a financial crisis. That was just a temporary panic. Imagine what happens when we have a full-blown currency crisis, when people realize the dollar is dying and they need to get into hard assets immediately. The shortage of physical metal is going to make 2008 look like a minor inconvenience. The smart money understands this. That's why they're accumulating now. That's why central banks are buying at record levels. That's why wealthy families are moving significant portions of their wealth into precious metals. They know what's coming. They're not waiting for confirmation. They're not waiting for the mainstream media to tell them it's okay to buy. They're acting now while they still can. And that's what you need to do. You need to act while there's still time. While you can still get physical metal at reasonable prices, while dealers still have inventory, while the system is still functioning normally, because once the crisis hits, once the panic starts, all bets are off. You're going to be competing with millions of other people who suddenly realized they need to protect their wealth, and there's not enough metal to go around. Now let's talk about what this means for your specific situation, for your retirement, for your family's financial security, because this isn't just about making money. This is about survival. This is about preserving the wealth you've spent your entire life building. If you're retired or close to retirement, you're in the most vulnerable position. You don't have time to recover from a currency collapse. You don't have decades of earning power ahead of you to rebuild your wealth. You need to protect what you have right now. And the traditional retirement strategy, the 60-40 portfolio of stocks and bonds, that's not going to cut it. Bonds are going to get destroyed in a currency collapse. Stocks are going to be volatile and unpredictable. You need something stable, something that's going to hold its value no matter what happens to paper assets. That's where precious metals come in. That's where gold and silver provide the insurance policy that can protect your retirement from the chaos that's coming. And if you're younger, if you're still in your earning years, you have an opportunity here. An opportunity to position yourself for the greatest wealth transfer in history. Because when currencies collapse, when the old system breaks down, wealth doesn't disappear. It just changes hands. It moves from the people who are holding paper to the people who are holding hard assets. The people who understand what's happening and position accordingly, they're going to come out of this crisis wealthier than they went in. Not because they got lucky, but because they understood the fundamentals. They understood that you can't print money forever without consequences. They understood that hard assets always win in the end. This is your chance to be on the right side of that wealth transfer. This is your chance to protect your family's financial future. But you have to act. You have to make the decision to move at least a portion of your wealth into hard assets before it's too late. Now, I want to address one more thing before we wrap up. I know some of you are thinking, what if I'm wrong? What if the currency doesn't collapse? What if the system holds together longer than I think?